Hello traders, Gary Wagner for Trending Markets just before 11:30 in Honolulu, 4:30 in New York. Dow Jones Industrial Average closed over an hour ago and closed lower, nominally lower, off a little bit shy, or a little bit over, I should say, of 0.25% down 50 points in the Dow Jones Industrial Average, 17,867. So we did see a lower day there. When we relate that to the Standard & Poor's, that of course is where we do have a current position in. We are long at 2068. Our stop is at 2080. Low on the day is 2090.50. Market did close off, or is off, I should say, about 8.25 points on the day. And to me, that is to be expected. We're not going to see this market typically go straight up or straight down. What we do want to see is very, very shallow periods of correction within the market in between our up days. To me, that's the most positive way we can see this market move up. And what I'm talking about is as follows. When we look at this last rally that we've had, which really began at the end of September, in throughout October, this October rally, which was just tremendous, you can see that the market, you've got all of these up days followed by a very, very small corrective day, just a small down day. Market goes up again. And this is what we're looking for, these small corrections that come into the market here and here. You can see that again here. And so the reason I like this kind of a pattern moving up is that if you don't have these small little corrective periods, my sense is that you'll get a huge spike up, but then a real correction down. And of course, that's not what we want. We want to be able to ride this market as long as it's going up. And by moving our stop, we are in profits. But by no means do I want to get out of this position if the equities markets are going to continue to move higher. And here's what we're looking at in terms of the big picture. And I think that this is what's critical. We are just up against this whole series of tops at about 2120. And that to me that's our real level of resistance. We have this one minor top, which kind of corresponds to these highs here. But I don't think that that's a major technical number in the market, because now where we're at, if we look at these series of highs, and you can almost take it to about 2040, you had this really tight consolidation area that was so prevalent in the market just before we had our major drop. Now, we had some real indications of that major drop because it broke below both the short term, this is a 50-day moving average, and then the longer term 200-day moving average. We also believe that these averages have provided us with a lot of information, because you can see that at points in which the market rose and did correct, such as right here and such as right here, it corrected to support just above that average. So to me, that's something we want to pay very, very close attention to, and we want to get as far away from that to the upside as we can. I do believe there is more room for the upside. I also believe that this market will inevitably take out these record tops. I believe that that's almost a dead certainty. The $64,000 question is when that will happen. Will we see another sell-off before that, or will the market have the ability to kind of barrel straight through there? In other markets that are interesting, U.S. dollar, very, very fascinating. That is up almost a full percent, almost at 98. And what I find interesting about the dollar is that we absolutely have a close above the prior high in the US dollar, that high being right here. And so we've exceeded that. And then we have to look at these series of tops right here and right here. And when we draw our line across there, lo and behold, that is where our current resistance is. A move above this particular price point. And the next real level that it has, you've got a couple of them, but you're up at around 98.70. And of course, these record tops up at 100 on the dollar index. Lastly, a quick look at the crude market, which has really begun to melt down again. Look at this on a daily chart. You can see we had that huge spike up yesterday, taking us up over 48, only to drop tremendously today. 46.32, 46.52 is our current, putting it off almost 3% on the day. In other words, giving back predominant majority of gains that we saw yesterday in the market. We are returning to weakness, and my sense is that oil will continue to trade moderately lower to sideways over the next couple of weeks. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Thursday. Maintain your current long position in the Standard & Poor's E-mini. Maintain your current stop at 2080. Bye-bye.